Well, how the tables have turned. Today was risk-on fever with bullish comments coming from Elon, Bessent, Vance, and Trump, which allowed the market to rally, and we're seeing follow-through in the after hours as this administration comes closer to securing key deals with India, China, and the EU. But for all of the green we saw today, we need to ask ourselves, can we actually believe this rally? Because we're still in a daily downtrend, making lower lows, and the economy is still showing some very clear signs of deterioration. So that is the question we're going to answer today. Can we believe this rally? We're going to be diving into the charts and the data to dissect everything. There are some great charts, and there are some very, very concerning charts. Either way, buckle up, because we've got a lot to talk about. Let's roll the tape. Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks soared on Tuesday following a bruising day on Wall Street as investors built hope for de-escalation on several fronts of President Trump's trade battles. It was very green today, a broad-based rally across the board. We saw the mega caps, Google, Meta, Nvidia, Amazon rally. We saw the financials rally. We saw industrials rally, communication services for the most part, healthcare, everything was in the green except for a couple of outliers that reported earnings. For example, RTX, they were down 9% on what was subpar earnings, and a couple of other names. But you saw every single sector gain. Gold fell, so a clear rotation here, a clear risk-on rotation. Gold was down 1.42%, but also just pulling back from its highs. And when we get like positive trade developments, we're going to see that risk-on rotation with equities rallying, gold selling, and just that money rotating into equities, with the S&P 500 gaining 2.6% today. And it wasn't just large caps, small caps, mid caps, value growth blend. Everything was really rally. It was actually just a broad-based rally. For example, look, large cap growth up 2.56%, large cap value up 2.82%, mid cap growth up 3%. So we're all in a very similar ballpark. There wasn't just one factor segment outperforming the rest. And we actually saw that globally as well. Sure, we had a little bit of volatility in Europe, but North America was very green. South America was very green. Asia was very green. Australia was very green. A very green day globally. And all of this comes off, I guess you could say, de-escalation in trade policy. Scott Bessent, this was a big headline. Treasury Secretary Scott Bessent told a closed-door investor summit Tuesday that the tariff standoff with China is unsustainable and that he expects the situation to de-escalate. And that is why, the S&P 500 was up in excess of 2.6%. I know because of all of the volatility, we've come to expect outsized moves, but a gain of 2.6% on a day, that's a very strong day in the S&P 500. And this is one of the major reasons. Another one is because JD Vance is currently in India and apparently making very good progress with US trade deals. He praised the Indian Prime Minister, and I'm going to read a quote from this Financial Times article as well. The US, under President Donald Trump's administration, is pressuring India to grant Amazon and Walmart full access to its $125 billion e-commerce market as part of ongoing trade negotiations, according to a Financial Times report. The US aims to secure a level playing field for these companies, which currently operate in India through local units, but face restrictions such as bans on holding inventory or directly selling to consumers. These limitations do not apply to domestic competitors like Reliance, which can leverage its extensive retail network and physical stores. So there is a lot of ring fencing going on in India with regards to US competitors trying to enter that market, which to a degree is anti-competitive. That is an anti-trade barrier. Donald Trump is trying to level the playing field. Apparently talks are going very good, and this could be exceptionally good for Walmart, Amazon, and a whole bunch of other US companies trying to enter this huge market. It's a $125 billion market, and Amazon and Walmart have a lot of share take there. Very interesting to see that, and the market loves to see this type of stuff. Also, we did get some easing here. President Donald Trump just came out and said after the bell that he has no intention of firing Jerome Powell. Now, this was creating a little bit of uncertainty in the market, so it's really good to see this, and the market is going to take that as a positive sign. I think Jerome Powell is good for the job, and it really just goes to show that the administration admire the Fed's independence, and I've been saying that for a while. The Fed needs to remain independent. It's just better in the very long term. And a couple of market movers today. Tesla reported its earnings. The stock was up 5% today. It was up and down here. It sort of was kind of flat in the after hours, and these were just a dumpster fire of earnings. Revenue came in at 19.3 billion versus the estimate of 21. Adjusted earnings per share missed by 40%. Gross margins was slightly higher than expected, 16.3 versus 16.1, but still really, really bad earnings. They didn't give guidance. The company said it is difficult to measure the impact of global trade policy, and the tariff landscape will have a larger impact on its energy business. Notably, the company excluded its return to growth forecast from its earnings report. And yeah, it was a very, very ugly report, but it looks like a lot of it was priced in. So I do think Tesla goes higher from here. Otherwise, on a report like this, the stock would normally be down something like 20%, as was the case with Enphase Energy today. It reported adjusted earnings per share of 68 cents, missing the street's expectation of 70 cents. Revenue came in slightly below expectations by 1 million. And so when you have a double miss and you lower your guide, Q2 guidance came in with a 2% drag from new tariffs. Total FY gross margin outlook. The total financial year gross margin outlook reflects IRA and tariff dynamics as well. They missed the midpoint revenue and EPS guidance, and the stock was down 11% on the day. And this was coming on the back of solar stocks absolutely ripping. First Solar and a whole bunch of other competitors absolutely soared today on the back of Donald Trump saying he's going to slap a 3,500 tariff on imports from Southeast Asian countries with regards to solar, meaning he wants you to buy American solar, stuff like Enphase Energy, First Solar, and Tesla for the most part. And that is why we saw these moves in the market today. And with all of that, we had a strong day of breadth. 5,200 advances, only 1,000 decliners. We saw inflows in the NASDAQ 100, the New York Stock Exchange, the S&P 500 gaining in excess of 2%. And market momentum, it looks like it's turning. The 5-day moving average officially above the 71% mark. This is what you want to see. Look how close we are in the 20-day moving average, and we saw tangible improvements across the board. Now, diving into the charts, guys, you can see a very positive day. All of the major gauges were up in excess of 2.5%. The S&P 500, the NASDAQ, the RSP, mid-cap, small caps. And the markets is absolutely rallying here in extended hours on the back of those Jerome Powell comments saying he won't fire Jerome Powell. And I believe this is unreported. This is just some news I got off Twitter. Trump said something along the lines of he may lower China's tariffs. So we are seeing a very positive move here in the extended hours. We'll see by the end of this video if we get more news, and I may just report it at the back end. Nonetheless, there's some good news happening in the market, especially when you see an extended hours moves like this. Also, if we just quickly go ahead and add Tesla right here, when I actually recorded the first part of the video, Tesla was largely flat on the day. In extended hours, it's now up 3.83% because Elon Musk during the earnings call said all of the groundwork for Doge is now set. Starting next month, his time at Doge will be significantly less than what it previously was. So he sort of was just setting up the groundwork for Doge to go ahead and cut a whole bunch of government spending. This is very, very good news for Tesla shareholders. Up 4.6% on the day, 4% here in the after hours. Great reaction. We'll see if it continues tomorrow, but the market seemed to be liking all of this market development again, but very strong here in extended hours. Now, looking at some other parameters for the market, you could see Europe was slightly positive here on the day. Volatility did abate ever so slightly. The front month VIX looking at 25, spot VIX at 30. So we're still in backwardation, and the market's still telling you that near-term volatility is still a problem. Nonetheless, volatility is declining, and that's very, very good, with the front month VIX looking at the 25 level, getting towards that more normalized territory, low 20s, high teens. The 10-year yield fell today along with the 30-year yield. The 2-year yield did gain ever so slightly, and the dollar was pumping today, but still below the $100 mark. Very, very strong moves. And today truly was just a risk on rally. Bitcoin was up 6%, and we've been super, super bullish on Bitcoin as of late on this channel, and it's really good to see it pay off. We're going to talk about Bitcoin, and gold was down 1.3. It really does look like we are starting to see the early signs of a risk on rally, and equity markets are doing some very, very constructive things. Now, we did go ahead and say that we did put in a higher high right here in the S&P 500, right? And we kept putting in lower highs all the way to this high right here, where last week we said we would find a little bit of resistance here at the core wall. And I said yesterday, two things will need to happen. If we go ahead and test these lows right here, as long as we hold this low, right, we probably do go higher from here. And it does look like we are holding these lows at the moment. You can see right here, we did try and come down. We did break this low, but ultimately the 4,900, 4,800 low is the major low. It does look like we're forming a higher low. What we need to do now is we need to go ahead and break this level right here in the S&P 500. And if we just actually go to the SPY, you can see that the post market is sort of right here. So we're still below this level, but the post market, we're ripping here in the after hours, the S&P 500 up 1.55%. So ultimately, what we need to do now in the S&P 500, right, is go ahead and take out this high right here. Ultimately, I think the best thing that the market can do near this week is probably go ahead and close above the 54.95 area. If we can go ahead, close above the core wall, I think we're going to see this move up, and then we can target these higher levels to the upside in the S&P 500. However, we need to go ahead and break some of these highs. If we don't do that in the S&P 500, then we will continue to follow the trend, and ultimately the trend is clearly to the downside. We know this because we've made lower lows, lower highs on the way down in a 20% bear market correction. Very similar situation in the NASDAQ 100. We've made lower lows, we've put in an ultimate low, and it does look like we're putting in a lower high. We just need to go ahead and take on some of these higher highs to confirm us the move higher. The RTY, one of the best performers here today, very similar situation. We just need to go take out this high right here and ultimately go have price discovery at this wick right there. We go ahead and do that. Bob's your uncle. We are in positive gamma for most of these indices, and that's very, very positive. Ultimately, guys, we are in a downtrend. Don't forget that, unless we actually go ahead and break above some of these highs right here. When we do that, everything's all good. But if that doesn't happen, we are still in a downtrend, and we do need to realize that. That being said, you guys know I've been a champion. I've said buy equities, and I've been a big supporter of companies like Meta. Meta was very, very positive today, up 3.2%. I've been a big believer in Visa. Visa was up 3.53% today, up 1% here in the post market as well. EVVTY Evolution AB. This is a stock that's actually up about 12% year to date, up 1.13% today. Very, very strong momentum. This is part of the reason why my portfolio has remained so resilient this year. Another stock I do like, if you're looking to get into luxury, is Prada, right? Don't go buy Hermes, don't go buy LVMH, go buy Prada. It's got the highest gross margins. It's got more pricing power. It's the cheapest on every multiple, simply because it trades on the Hong Kong exchange, and you can go ahead and buy the ADR. It trades at a 9 times EV to EBIT. It grew revenue by 14%. It's expected to grow revenue by another 14% this year, when the broad luxury industry is going to fall 2%. It also recently acquired Versace. I have a full research note on my Twitter if you guys want to go see my full view. But those are the individual stocks I do like. Now let's quickly go ahead and have a look at Bitcoin. Bitcoin is ripping to the upside. This is exactly what we said would happen. This is what's happening. No one should be surprised this is happening. Why? Because I have an indicator. It's called the Global M2 Money Supply Indicator, free for anybody to use. And if we actually just go ahead and turn this Bitcoin into a line chart and then overlay it very, very closely, you can see that when the money supply moves up and when the money supply moves down, Bitcoin follows. Now we do decouple. Now we are currently decoupling, but that's normal because we normally do decouple, as you can see right here. That is completely normal. What we are expecting is somewhat of a low to be put in between now and sort of the end of April, and then a rip to all-time highs. It does look like we're kind of already getting there. Bitcoin was up 6% for today, but I told you guys weeks and weeks in advance, you want to be buying Bitcoin at the low 70s level. Had you been doing that, you'd be up something like 15, 20% and 6% here today. So for those of you that missed this rally, there is still time to get in. I think we will see a little bit of a breather. I actually wouldn't be surprised if we go ahead and actually test this area again right before the end of April, but it does look like the rally is in full swing. It does look like this is officially the low. We've been calling this for weeks and weeks now, and we've also said we don't want to be buyers of gold. We also don't want to be sellers of gold, but we don't want to be buyers of gold. If we do get a move sort of to this 2700 area in gold, that is where we will be buyers, but not at the moment. And this is a very, very ugly looking candle. Look at that wick, right? And then we actually saw follow through today. If we go ahead, start taking some of these lows in gold, that could mean we could actually see a little bit of a downtrend while the rest of the market continues in this risk on fever. Today was very, very different, right? We really did see that risk on rotation, and it was so broad, led by cyclical sectors, led by the discretionary space. And we're seeing some very positive moves here in the extended hours, led by Tesla. the mega caps. If we can get some good news from Google, they report on Thursday, and some of the other reports later on this week, that could further propel the market forward. But right now in the S&P 500, things looking very positive. We're in positive gamma. All we need to do now is take some of these highs. If we can go ahead and do that, then we would have confirmed an uptrend with a lower high, but we need to do that first. And I would say we need to do it sooner rather than later. So for now, I'm positive. You know what the stocks are like. A lot of these tech stocks are still 20-25% off their 52-week highs or all-time highs. So go ahead, enter them. You're not late. You're late with Bitcoin, but you're not late with the broad equity markets. And if you do want to get exposure, buy the S&P 500, buy the Nasdaq 100, maybe look at the RSP, something like that. But buy the dip, guys. This does look like it's going to go higher. And what I would do is add exposure right here. And the second we break above some of these key levels, particularly the 5,500 area, this is where I would be adding exposure, looking to retake some of the higher levels, potentially the 6,000 level in the S&P 500. Let's talk about sentiment. And looking at two sentiment indicators right here, stock price strength and stock price breadth, we have two indicators, stocks making net 52-week highs versus lows, and the McKellen volume summation index. Both of these indices are at lows, telling us that very few stocks are at 52-week highs, a ton of stocks at 52-week lows, and market breadth is generally weak. And to be honest, this type of extreme fear we're seeing in the market is not unfounded, because earnings estimates are coming down in a very big way. And to be honest, I don't even think this right here factors in the impacts of tariffs fully. I think the market is giving this administration the benefit of the doubt for now, and ultimately Q1 estimates as well as full year 2025 estimates can come down materially because tariffs will slow growth, increase inflation, and undermine confidence. Weaker demand will hurt revenues, higher costs will hurt margins, and reduced profitability will hurt buybacks. Even if the administration changes its mind, the longer the uncertainty remains, the longer spending will slump and the greater the hit to growth. It does seem with earnings expectations, the market is giving this administration the benefit of the doubt. We are simply tracking the average consensus estimates of the last 10 years. However, when the rubber hits the road, if the administration does not act quickly, we are going to see these estimates fall very, very significantly. However, that is not necessarily a bad thing for the S&P 500 from year on out. We do know that the average bottom in earnings and the average bottom in the S&P 500, the S&P 500 bottoms about 9 months before earnings bottom. And you can see here that the median and average drawdown in the S&P 500 during recessions is about 29 and 24%. Let's just call it 25, 26%. But the average return 1 year and 2 years later tend to be 40% and 54% respectively, 39 and 58% if you look at the median return. So while all of this is happening right now, the markets tend to price this in retroactively and very, very quickly. However, this administration needs to act fast. Otherwise, the drawdown and the recession will be very, very deep and prolonged. And we do know that the IMF's 5-year forecast for global growth has steadily grown weaker in recent years, especially since 2020. And 5-year forecasts for real GDP growth are at the lowest levels we've seen in a very long while, going back to the 1990s. However, this can change in a dime like you see right here. And at the same time, when we do look at financial conditions, this index stands at a 6 level right here, which does indicate it's slightly accommodative. However, again, we can change at a dime, especially if rates keep rising, capital costs keep rising, and the Fed stay on hold for a lot longer. However, if we do get into a recession, the general trend, what we've seen over the last, I would say, 100 years, is that recessions have become far and fewer between, and they've become a lot more shallow because our politicians, policymakers, the president, the Fed tend to step in very, very quickly and expect very much of the same if we do get into a recession in the next couple of months. And that is why, guys, when we do get dips in the S&P 500 that tend to be 20%, 25%, even further than that, buy those dips because 1 year later, 2 years later, things tend to pan out very, very well for the S&P 500. Looking at data tomorrow, Wednesday, we have a couple of Fed speakers, and then we have the PMIs, the S&P Global Flash PMIs, as well as new home sales. That's going to be the biggest data points we're going to look at. Earnings for the rest of the week, the big names before the open, Boeing, AT&T, Vertiv, right? And then we have GE Nova, PM, Philip Morris International, and then ODFL, Old Dominion Freight. And then after the close, we have IBM, ServiceNow, Chipotle, Centuries Community, Newmont, Texas Instruments, Lam Research, a star-studded day. This is the second biggest week for earnings, with 27% of S&P 500 companies reporting earnings. Next week, it's 37%. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.